Welcome back to Fast Market, everyone. Kevin Hinks and Nick Theodorakis here for our cash tag segment. Now I want to bring in the co-founder of LikeFolio.com, Mr. Landon Swan, to the show to talk about our high-profile name of the day, Landon, and that's Disney. I mean, here's the thing, Landon. So many headlines, so many different ways you can go with this topic. Where does LikeFolio's data really bring value?
Yeah, I tell you what, I mean, this company is basically three companies in one. You can argue it's more than that. I mean, they've got entertainment, sports, and experience, right, which means parks. And, we do a pretty good job of understanding a lot of that, especially the experience side. Some of the entertainment is too much for us. Frankly, we can't track all of the stuff that they do because they're just too big. But when we do look at some of the more specific sports entertainment, it's pretty interesting. I mean, they've got that news that's coming out where they've got a partnership between ESPN, Fox, and Warner Brothers to basically create the monopoly of streaming sports, right? I mean, that's not what they say, but that's what it feels like. They're taking every sport. It's going to be the ultimate streaming sports package, and it's going to be very attractive to users and to advertisers, which frankly they need. I mean, last quarter they talked about having a revenue decline in advertising, which no investor wants to hear that, and the stock's been from 200 3 years ago down to 78. Now it's bounced back up to 98. It's kind of starting to maybe make a comeback. So this news, I think, is going to be good for investors. Definitely very bad for companies like Fubo. That's one that we always like to watch, and that one just got crushed today on this news. So I really think it's interesting to see what's going to happen out of this conglomeration, I guess, of sports. Now, when it comes to entertainment, last quarter they talked about entertainment, the experience side of things being up 13% on revenue, and we've got mentions now tracking at plus 34% on revenue. So pretty bullish on people going to the parks, and we know the ticket prices are going up. So LikeFolio is mostly able to measure interest and people who are going, not how much they spend. We know the ticket prices are up, and we know that there's more people going. So I think they're doing really well there. But I think the big news and the big thing that everyone kind of wants to talk about is what's happening with sports. And it looks to be pretty bullish. This seems like a really strong move by Disney, and looking forward to see how this impacts future reports.
Interesting you mentioned Fubo down. Netflix is up $10 today. And they've been talking about getting into sort of live television as well. Not linear, right? But how do you see this sort of sports play, this power play, if you will, in sports kind of impacting the Netflix kind of plans going forward? Because it seems like, well, they don't want to do straight linear TV. They want to get into more actual live events.
Yeah, I think that there's so much money in it. I mean, it's just something that the content it's expensive, but it's easy, right? I mean, there's always a game to be had, and you don't have to make the next series or the next movie in the series of Star Wars or whatever it may be. And it's much less of a gamble. I mean, people are going to watch the college football championship. They're going to watch the Super Bowl. They're going to watch the NBA playoffs, et cetera. So it's kind of an easy play. It's a safe play when it comes to sports. And you can see that Hulu, in our web visit data, Hulu's been struggling. So I think that this, especially compared to the competition, within Disney, but you can see that, this is going to be a big plus for Hulu. ESPN also is going to benefit HBO Max as well. But yeah, I like that Netflix recognizes it. I want to see where they go with it. But right now, I think the main story here is that Disney's showing some really strong decision-making skills, really strong leadership. This is a very big power play move, and I think it's going to affect the bottom line of one of their three divisions. They've got the three now: entertainment, sports, and experience. One of those is going to do much better than it has in the past.
Landon, bear with me. This is going to be a little bit of a long question, but this company, though racing to manage the hemorrhaging that streaming is doing, right? And I think today's move is part of that. Linear TV is dying. We know that. Cable TV might be right behind it, but Disney's still spending money. 3 new cruise ships in the next 5 years, $60 billion in CapEx over the next 10 years. They're still spending money. Here's my question to you, Landon. This company long term is probably going to be able to right this ship and figure out how to get this back on track. Where's linear TV in the next 5 years, Landon?
I mean, rear view mirror. I don't know. I mean, it's tough. I mean,
yeah.
I think that we've seen the direction at which all of this, which all the way that entertainment's going. It's all streaming, and it's. I just don't see a big future for it. But one thing that I think some people forget with Disney, when you get caught up talking about sports and you start thinking about all the movies and TV shows and whatnot, the content, their parks and their experiences, including the cruise ships, it's just a rock, right? I mean, that is just solid revenue that just seems to never have a chance of going away. I mean, it is just so strong, and everything that we see is not only extremely positive for Disney when it comes to their parks and number of people going and the happiness and all that, but also when we look at consumers talking about cutting back on spending, experiences and travel is one of the last things to go, right? They're cutting bills at home. They're spending less on groceries. They're cutting services. They're cutting cable TV and things like that, switching to streaming. They're finding ways to save money, but they're not getting rid of the road trips or the family vacations. And for a lot of people, that means a Disney experience. So they've got what you would have thought would be a headwind with consumers kind of tightening their belt a little bit is actually a tailwind, because that seems to be the last place that people want to cut. So you kind of get three companies in one, and I would say that right now experiences is the strongest, the most steady. But now I would argue that sports is going to take that second place seat above entertainment, and the battle for nonstop content and the next movie and all that is probably the thing that I would guess would weigh on investors the most out of their three divisions. With, again, experience being the sort of the rock, the foundation of the company.
Yeah, Landon, your park visit mentions are up 34%. Any company would love 34% growth, and that's in a Disney theme park that probably isn't doing anything new exactly, except becoming more and more popular. So Disney has. You have to remember when you look at this company, streaming is that high-profile problem right now that Disney has, but they've got so many other businesses that are doing extremely well. Landon Swan, we appreciate you coming on always and giving us the LikeFolio data. Have a great day, Landon.
Thanks, Kevin. Thank you, Nick.
All right, Nick. This is a company going.